Hello, it's Rhonda Thomas, and we're about to do Managerial Accounting's Chapter 4 coursework. Okay, so let me go ahead and share my screen, and we will get right to it. This chapter compares manufacturing overhead methods. Okay, so we want to understand how to allocate overhead to a certain department or a certain line of products. And then we want to make sure that we know how much each unit gets of overhead. Okay, so let's start with number one. Okay, so we'll have a single plant-wide rate, a multiple department rate, and a new one called activity-based costing, which is known as ABC. So this first one is demonstrating the single plant-wide overhead rate. We have 3 snack lines: tortilla chips, potato chips, and pretzels. Here is, and all of this is estimated budget amounts, okay? Budgeted and estimated means it's what you think is going to happen, which doesn't necessarily mean that is what will happen. So we're not looking at actuals yet. We're just coming up with ways of coming up with estimates and how, a certain amount of overhead can be applied or allocated to, like I said, product lines or departments or whatever they're asking. So here we are with a snack company. Here is their list of total costs. Notice the first 4 are overhead. Selling and admin are period costs. So you would want to eliminate those in your total. So over here on the right, I have all 4 of those added together. So I've got my total amount to allocate of $90,666, and that must be allocated over the 3 snack lines. Okay, so here comes the volume of what, and this is by the case, not by the bag or whatever, but by the case. So it looks to me like tortilla chips are the heaviest volume, with potato chips being the lowest, right? And then this is how long it takes in direct labor hours to process a case. So I'm going to put that time next to it. So I'm going to put all of this in a little table here, and I'm going to do a little multiplication. So 6,900 cases times 0.15 is 1,035 processing hours. When I do that to all 3 lines, I get processed of 1971. Okay, so what we want to do is take our total overhead estimate and divide by our estimated direct labor hours, and we get a single plant-wide overhead rate of $46. Okay, now we're going to use that rate times the number of hours that it takes to process that line. So if you look at tortilla chips, 1,035 hours times 46, here's the budgeted amount of overhead, 4,610, and then you divide that number by the number of cases. Okay, the number of cases. So remember, here's the number of cases. So I put the little calculation here to the side as to how I calculated this number. Okay, I would always advise you, even if the problem doesn't, is to keep in mind how much you're going to allocate, because when you're finished allocating, it should add up to the total. Okay, so that is always a nice check figure to use for the 90,666. And like I said, that was the first four, and you probably have different numbers than I do. So please start with adding up the first four and leaving out the selling and admin, okay? So there we have that. Okay, so you say, what does this mean? This means that for every case of tortilla chips, we are applying $6.90 of overhead. For every case of potato chips, $5.52 of overhead, and every case of pretzels, $4.60. So this is treating all the lines equally just based on direct labor hours. You say, is this right or wrong? I don't know. I don't know what the other methods would produce, okay? But you can at least get an idea of one method. Okay, so let's go to the next method. Okay, the next method is multiple production department overhead rate. So you're going to end up with more than one department. So in this case, we have pattern department and we have the cut and sew department. Put down the amount that they've allocated for the pattern department and the cut and sew department. We don't figure this. This is done for us because this takes more than what we usually do in this class, but added together, there is the overhead in total, but that's how they chose to divide it out. We're going to be looking at direct labor hours. So we got direct labor hours for each department, right? And then if you take the amount of overhead cost and divide by the estimated direct labor hours, the first department, which is pattern, is $68 per direct labor hour. What does that mean? For every direct labor hour worked, $68 of manufacturing overhead is applied. Now we're going to do that for the cut and sew department. 306,000 divided by the 3,400 direct labor hours. And remember, now it's 6,100 direct labor hours between the two, and that turns out to $90. Well, just remember, they've got quite a bit more of the overhead, and they actually have more direct labor hours. Okay, so now we're going to apply these amounts to three glove lines, a small glove line, a medium, and a large. Okay, so I've got small, medium, and large in 3 columns. And then I've got the time that it takes to make each glove. So these 3 are right here. Okay, now we want to take the rate. Okay, so here's where we're at. We're going to take equals. So we're going to click on here to see what the formula is. So we take 0.04 of an hour times $68, and we get $2.72. Let's stay with the pattern department because we're going to use the same rate. Then we're going to take 0.05 hours for making gloves. I assume it's a set of gloves times the $68. Okay, and that gets $3.40. And then this gets okay, so this is this time 0.06 of an hour times $68 an hour, 408. Now we're ready to use the time for the pattern department. Okay, so I have to remember pattern is the second line. 0.08 times 90 gives us 720. 0.1 times 90 gives us $9, and 0.12 times 90 gives us 1080. And then you have to add the 2 amounts, right? So this is the pattern part of each pair of gloves. right? And then this is the cut and sew. So apparently the cut and sew is handling more of the overhead, and then you add those two amounts together. So the first amount is $9.92. The medium has $12.40 of overhead per set of gloves and $14.88 for the large set of gloves. All right, now we're just about to get into activity-based. So before we do that, let's go through what an activity might be for various departments here, right? So this is a food department, and they use activity-based costing to determine product cost. For each activity listed in the left column, select an appropriate activity base from the right column. You may use items in the drop-down list more than once or not at all. So if you look through here, if you're looking at a cafeteria, the costs of the cafeteria would be number of employees, customer return processing. Now, some of this is pretty obvious and some of it isn't as obvious. Okay, so probably the number of customer returns is going to drive the cost. How about electrical power? Probably the kilowatt hours used. Human resources is what's going to drive the cost of human resources? Probably the number of employees, because the more you have, the more people you need to work in that department. Inventory control, it's the number of inventory transactions. Invoice and collecting, who do we do that for? Customers. So this is going to be based on activity, how many customer orders there are. How about depreciation of a machine? Usually machines are depreciated either by the year or number of machine hours, or if this was a vehicle, it might be the number of miles driven. Okay, how about materials handling? So materials handling are looked at by the number of moves materials make throughout an assembly process. How about order shipping? Who orders ship? Who uses order shipping? Well, customers do. How about payroll? Now, payroll is usually part of human resources, but payroll costs are going to be driven by the number of payroll checks processed. So the reason why the employee number doesn't work is some employees are only paid monthly. Maybe other employees are paid weekly. I can't imagine anybody being paid daily, but I guess it could happen. But so the better number is how many payroll checks are processed at a time. Performance reports. Yep, it's the number of performance reports. Production control, number of production orders. Production setup. So a setup is changing the characteristics of a machine or equipment or putting them in a different order to produce a different product. So the time that's spent setting up a run of production can actually be, you can actually apply a cost to it. Purchasing, the number of purchase orders. Quality control, the cost of quality control would probably be the number of inspections, and then sales order processing, the number of sales orders. So I understand this probably isn't rocket science, but that is what the book suggests, okay? And it might be very specific to a given company or industry. All right, so let's go to this one. Okay, this one, you have different numbers than I do. Okay, so we've got three kinds of refrigerators, and we're going to be using a single plant-wide rate versus an activity-based rate. So we have refrigerators that are looked at based on volume. We have a low volume, a medium volume, and a high volume. We have the number of machine hours that each refrigerator has, number of setups, associated with each refrigerator, number of sales orders, and then the number of units that are produced of each line. So here is your most volume line. Here's your lowest, yep, which makes sense. Here are three rates. We have 155, 235 for setup. Sales order processing rate is at 50. Machining activity is 155. Now here's the one that they hid. The machine hour rate is 200 per hour. So when we figure the first single plant-wide rate, that's what we're going to use. So here we go. So I have put $200 here. You put yours down. We're going to take that times the number of machine hours and then divide by the number of units to get the rate, okay? To get the rate. And then I also put the rates for the different activities. Notice this is machining also, but this machining is $45 less than this one is. And then it also is spread out over setups and sales orders. And I've just put in this into a table, okay? So let's go ahead and put down the single rate. And how I found the single rate is I took 24 machine hours times 200, and I'm dividing by 160. So here's the amount when you take 200 or 24 hours times 200, you get 4,800. Now I don't flesh all of these out. I am fleshing this one out to help you understand where I'm getting the numbers. So one more time, 24 hours times the $200 rate. And then there's the number of units. And when you divide, here's your numerator, here's the denominator. Let me just put numerator here. And denominator. Okay. So when you do the division, they all come out to 30. Now you could add all these up, okay, to 229,800. You say, where'd you get that number? Well, by adding up all of the hours, right? Adding up all of the hours. So if you add up all these hours here, just a minute. I want to add those up. You get 1149. Okay, 1149. Is that right? Okay. Okay, this is the this is the number of units here. Okay, so that's why that's such a difference. Remember, this is number of machine hours. You could go across here and see what all these add up to, which isn't a bad thing to know. Okay, so of your setups, there's how many. Okay, there's the 7,660. That needs to be divided into 229,800. There's where you get your $30. Okay, so 30, 30, and 30. But if you'll do them separate, you'll still get 30 as well. Okay, now we're getting ready to do activity-based costing. So now we're going to do it over machining, setup, and sales order process. And now the machining rate is 155. Okay, so this is where these numbers are coming in here. And then we're going to want to know the difference between the two amounts. And then I'll show you how to do the percent of change between the two different methods. Okay, so here comes low units. Here's the low units. We've got 24 hours times $155 an hour instead of 200. So there still is a machining part. The setup is 14 setups times $235 each, and and then 38 sales orders times 50. Okay, so when you add up all of the activities based on the hours or units, whatever, for the lowest volume, you get 8,910, and there are 160 units. And that means 5569 is how much we're going to apply of overhead to each unit. Okay, wow, that's quite a bit more. In fact, when you look at the difference, it's 2569 between the two of these. And then to find your percent change, here are the calculations. A percent change is the new number minus the old divided by the old. The dollar change is just the new minus the old. Okay, so I went ahead and put this in, even though they didn't ask for it, but that would be, you take this number and divide by the old number. So what this is saying is this allocation is the difference between these two, first of all, is $25.69. And then that means that if they use this one, the ABC allocation is 85.6% more than what the single rate manufacturing overhead is. Let's go to the next one. Now we're ready for the medium volume, which is right here. First thing we're going to do is take our 225 hours times 155,000. Then we take our 13 setups times 235 and our 88 sales orders times $50 each. And all three of those activities get added together with 42,330. And then it gets divided by the units. Okay, so these are units. And they told us our units up here. And I've got that over here in my, I've got my units up here. All right, and then, so we want units divided by units. This can get pretty confusing if you don't, I mean, you're going to have to try to keep things straight, and you're going to have to understand where you got each number, because sometimes it takes a while to get used to that. So whatever we do, when we find that refrigerator line, we then have to divide by the number of units that they make. Apparently, they make quite a few of the high units. Yes, they make 6,000 units of the high volume, right? So let's do the math here. Let's get back on track. Okay, so the medium units, the machining with 225 machine hours times 155. Okay, and then we want setups of 13 times 235, and then we want sales orders, 88 sales orders times 50. When you do all three of those activities and add them together and divide by 1,500 units, each unit in the medium refrigerator gets $28.22 applied to it of manufacturing overhead. Okay, and the difference there is $1.78, and it's a negative 5.9, because if you take a negative 178, that's the difference in dollars, and divide by the old rate of 30, you're going to see that it went down negative 5.9. Okay, the last one is the high volume units. So machining, there's 900 machine hours times 155. Setups are 9 setups times 235 and sales orders of 120 times $50 a piece. But they've got quite a few more units to spread out this amount. Yes, it's quite a bit more in overhead, but it's spread out over 6,000 units, right? 6,000 units. So then 2460. So the difference between the single rate of 30 and the ABC amount is $5.40. And when we did the ABC costing, it actually reduced the allocation by negative 18.0%. Okay, so once again, your formula, percentage change formula, is new minus old divided by old. Okay, so this is a good formula to remember. I remember an accounting teacher that taught me this one. Yep. And I remember how he taught it and so forth and so on. So it really stayed with me. So once again, now we're going to tell the story. It says why the traditional overhead rate per machine hour greater. Why is the traditional overhead rate per machine hour greater under the single rate method than under the activity-based method? The machine hour rate is greater under the single rate method than under the activity-based method because the entire manufacturing overheads allocated by machine hours under the single rate method. However, only a portion of the manufacturing overhead is allocated under the machine rate method using activity-based costing. The remaining manufacturing overhead is allocated using two other activity rates. Thus, the numerator for determining the machine hour rate under activity-based costing must be less than the numerator under the single machine hour rate method. So here is column C. Column C indicates that under activity-based costing, the low volume product has a higher per unit cost. Yeah, because there's only 160 of them, than calculated under the single rate method. In contrast, under activity-based costing, the high volume product has a lower per unit cost than calculated under the single rate method. Yeah, because high rate has 6,000 units. So be different if they made all the same number of units. So they make quite a bit different volume. Thus, the low volume products are produced and ordered in smaller batch sizes. The opposite is the case for the high volume product. Thus, the low volume product are produced and ordered in smaller batch sizes compared to the high volume product. This implies that Whirlpool may wish to simplify its product line by eliminating some of the low volume products or by attempting to reduce the overall cost of setup and sales order processing activities. So, yep, you may decide this is how you make decisions about whether a line should be dropped by doing some of this. Okay, onward we go. Okay, we should be doing the same ones here in this one. So 419, we can use activity-based costing and learn to evaluate our customers. Okay, so let me tell you what's happening here. So this is a manufacturer power distribution equipment for commercial customers such as hospitals and manufacturers. Activity-based costing was used to determine customer profitability. Customer service activities were assigned to individual customers using the following assumed customer service activities. So we have a bid preparation that they have figured at $420 per request. We have a shipment. We're looking at the number of shipments. And if we have shipments, it's $90 per shipment. How about support standard items? Number of standard items ordered. It becomes $30. And then support non-standard items. So when they order non-standard items, wow, it jumps up to 180. They give us these. Okay, so I have these right here. And then I have the records that they have right here. So I put this in next. This is the records of this stuff that they recorded for each customer, customer 1, 2, and 3. Okay, so you need to fill in a table that does this for you. Okay, so then we're going to keep customer 1 in this column and customer 2 and customer 3. Now all you have to do is put this information. So put the first 3 lines in a table. And be sure to put in the negative for the cost of goods sold so that you can calculate the gross profit. Now, yes, they did this for us. And they also gave the gross profit as a percent of sales. So down here is my gross profit percent of sales. And what this does is it takes the gross profit and divides by the revenue for all of them. So if you didn't know anything else, gross profit is the highest, right, for customer 2, but the percentage of sales is customer 3. So that's all we know by just evaluating percents of sales and so forth. Now let's do some customer service activities, right? So I have filled in all this at the top, and now we're ready for this number here. Now you have to keep an amount. So let's try customer 1. Customer 1 is 15 hours of bids times 420. Okay, 420. 420 is the rate. In fact, I'll put the rate here. Okay, $420 rate. I'll put that beside it so that you can remember. So that's per bid. Okay, we've got $90 rate per shipment. I know that's up above. And sometimes you forget it pretty quick when you got a lot of information in a problem. So then we have $30 rate per item. And then this is the non-standard items, which is $180 rate per item. All right, so here we are. And we're going to put this information in. So the first one is the amount for bids. For customer 1, let's just go across and do each bid amount per customer. So if you take 15 bids times 420, you get $630 or $6,300. If you take customer 2, which is 40 bid requests at times 420, you get 16,800. And for number 3, you take 60 bids times $420, and you get 25,200. So there are your bid preparation costs for each customer. Now we're going to go shipments. Shipments are $90 each. So customer 1 had 25 shipments times 90, which equals 2,250. Then customer 2 has 55 shipments at $90 a piece. So that is 4,950. And customer 3 has 50 shipments times 90. So that is 4,500. Now we need support items. Support items are, okay, so I'm clicking right here. Support items are 20 items times $30. Okay. For customer 2 is 35 items times $30. And then 52 items times 30 gives you 1,560. So like I said, these are the same numbers. So you should get through these with the same amounts I have. Okay. The last one is the non-support item. So every non-standard, it's support for both. But a non-standard item must take more time to support at $180 each. So now we want to see how many non-standard items did customer one have, right? They have six times 180 is $1,080 and 65 orders of non-standard items is 180 times 65. Wow. And then 85 times 180. I forgot to tell you the profit as a percent of sales. Let's go ahead and put that in. That actually came from right here. So if you take your gross profit and divide by your revenue, you get 37%. They did that for us. Okay, they did that for us. So put these numbers right here. Okay, so, but you need to understand how those numbers are calculated. So we take the gross profit and we divide by the sales. Gross profit was by sales. So if you didn't have these numbers up here, you would say that gross profit wise, dollar amount, 96,600, customer 2 is doing well. And then customer 3 is showing gross profit as a percent of sales. We're hanging on to 50 cents of every dollar of revenue from customer 3. Now we're going to take the operating income and subtract it. Wait, nope, this is the total service activities. Okay, total service activities. And then we're going to take, whoops. Okay, so if you take operating income after activities, okay, so here's what you did. Here is the total of the activities for this line. And then you need to subtract from up here to give you the income after customer service activities. Then you take that number divided by revenue and you get different percentages. Okay, you get 29% for customer 1, you get 30% for customer 2, and you get 24% for customer 3. So if we do this based on activities after gross profit, these weren't included yet, right? But now they are. And now the one that we thought was so great is not. It's the lowest actually. And customer 2 is still holding its own, but customer 1 is not far behind customer 2. All right, so let's make this story make sense. So the gross profit as a percent of sales indicated that customer 1 was the least profitable. When you look at gross profit, customer 1 was the least profitable. It had the lowest profit margin. What that means is for every dollar of sales we have here, we are hanging on to 37 cents for this customer. Would you rather hang on to 37 cents, 46 cents, or 50 cents for every dollar sold? Yep, that's the more attractive version. But then when you subtract all these customer service costs, allocated to these 3 customers, all of a sudden the one that was 50% is now down to 24%, and the second customer is holding its own with 30%, but then customer 1 has come up from behind in second place to customer 2. All right, so let's put it in. The gross profit as a percent of sales indicated that customer 1 was the least profitable, while customer 3 was the most profitable. After deducting the activity costs associated with customer service activities, customer 3 became the least profitable, while customer 1 became nearly as profitable as customer 2. The reason is because customer 3 consumed much more customer service activities than the other customers. Apparently, customer 3 ordered non-standard products that required specialized bid requests. In addition, customer 3 required more shipments, indicating smaller shipments to a customer's location rather than large shipments. Okay, so that is the story that these numbers tell you. Whew, okay, so let's go on. Now this one you'll have different numbers. Okay, this is going to be, we're going back to a single plant-wide rate. This is a dairy, okay? First thing out of the gate is to put down what the total manufacturing overhead cost is. Then you've got a blending department and the hours they spend direct labor, machine hours. Then you have a packing department. How many hours are going to packing for each of the 3 kinds of milk? We've got whole milk, skim milk, and cream. And I'm just repeating in this table what they're putting here. And of all the direct labor hours, we have 1,610 as a total, and we have 2,300 machine hours as a total. Now, the first thing we're going to do is, well, what if we had a single plant-wide rate? In that case, to get that, you would take, okay, so you would take, and sometimes this takes a little time. All right, you're going to take, so we're doing this just for the whole milk, skim milk, cream milk, okay? Whole milk, skim milk, cream milk. So we've got a rate of $140 an hour. When you take the total manufacturing overhead and divide by direct labor hours, what is its rate? It's $140 per direct labor hour. Okay, let's go to machine hour rate. How do we find it? We use that same manufacturing overhead, but divide by 2,300 machine hours. So when you divide by something that's a larger number, of course, the rate goes down. Now we're going to apply it to each of these lines. So the first one is going to have, we got to take the 2 whole direct labor hours. So we got 240 and 300. Right? You add those 2 together times the rate times $140. You get 75,600. Well, 75,600. Let's stay with whole. Let's stay with the whole. So now we're going to do it based on machine hours. Now we take the 2 machine hour amounts for whole milk, 610 and 350. Times the $98 rate. So this is the rate that we found. Okay, so this is a rate. Yep, I guess this should be the rate per hour. Yep, and it just depends on which one you're looking at. So you've got the whole milk with 75,600 and 94,080. Skim milk is going to take the direct labor for skim and the direct labor for packing, add it together times $140. You get 102,200. Then you take your 2 machine hours for skim, 550 plus 430 times $98, you get $96,040. Now we're into the cream line, the product line. So we take direct labor hours of 210 and 130 times 140, and we take the machine hours for the cream, which is 220 and 140 times 98, and put those amounts in. Okay, so this is using the single plant-wide overhead rate but using two different hours, right? So you say, well, which is better? Well, depends on which line you work for. If you work for the cream department, you want as little cost as possible, right? So the cream department, you don't really care. You don't really care which one they use because you're getting the lower anyway. Guess what? It all has to add up to that amount that we started with. Yep. But when it comes to machine hours, it looks like skim is still the highest, but whole definitely, there's a big difference between whole milk using, they get quite a bit more. So if you're skim, you don't really care because you're still ending up with, actually you're ending up with a little bit less. So yes, you do care. If you're cream, you want machine. If you're skim, you want machine, but if you're whole, you want direct hours, direct hour rate. Yep, whichever one gives you the least, that's what you're gonna want to work with. Yep. So there you have it. Let's go to the next one. It's the same problem, but now we're going to do a little more to it. Okay, so this time, we are, okay, they have taken that overhead. Now be careful, the overhead has changed. Okay, the overhead has changed. It's not the same. So it's 308,950. There it is. And it's broken up. 187,450 goes to blending, and packing gets 121,500. That is nothing that we had any control over. Okay. Then it says, determine the multiple production department overhead rate using machine hours. So blending uses machine hours, but packing uses direct labor. So what we want to do, here's machine hours. So all the machine hours add up to, and this is for blending. So this is these three here. That's what they're going to use. And then packing is going to use these. So I've highlighted in purple the ones they're using. So you take your total and divide by the number of hours, and you get $115 per machine hour. That's in the blending department, and it's their choice how they divide up the amount they're given. Okay, the amount they're given. Okay, now let's go to packing. Packing uses direct labor hours. So here we're going to use these four or these three, which add up to 900. So 121,500 divided by 900 gives you an hourly rate of $135 an hour. Okay, now we're going to apply these. Okay, now we have to remember what department we're in as to what hours we're using. So remember, blending is machine hours. Let's stay with blending first. Let's go to whole milk. Okay, and we're going to whole milk. So whole milk is going to use 650 hours times that hourly rate of $115. Okay, so that is 74,750. Let's stay with blending first. We want machine hours. Machine hours are 710 machine hours times $115 each. And then finally, cream. Blending is 270 machine hours times $115. So when you come up with these three numbers, guess what they add up to? They should have put a total here. It has to add up to 187,450, or something's wrong. So this is a nice check figure to double check. Oh yeah, I got everything and I got it right. Okay, let's go to packing. Now they're going to use direct labor hours, and their hourly rate of overhead is 135. So let's take 460 direct labor hours for whole milk at $135 an hour. You get 62,100. For the skim milk, it's 310 direct labor hours times $135 of overhead per hour. And then cream gets 130 direct labor hours times 135. And so you put in the numbers and then you add down, and then it adds up to the total here. So it's nice to have a place to check that you have done your job. Okay, so there you go. And these add up to these also, right? Yep, it has to. There's no other way that it can work, because you're trying to take those costs and allocate it per whatever it is, per machine hour or per direct labor hour. And we've got two departments that are using different ones, but it doesn't matter because they have different amounts that have been assigned to them of the overhead. Okay, now you couldn't do this up here. You couldn't pick direct labor or machine hours. They have to decide on one or the other because they're dividing it all up. Okay, but if management divided out the amount of overhead per department, then they could choose, okay, like they did here. But you can't choose if it's a plant wide. If this is going to go over the whole plant, you have to decide, are we going to use this one or this one? Okay, let's go to the last one. And now we're going to go through the three methods again. And I want to see what I missed. I don't think I missed anything. Let's see. Okay, let's go here. Okay, here we go. First of all, this is going to use the single, plant-wide, the multiple, department, and the activity-based. So we're going to make snowboards and skis. So we have indirect labor, cutting department, and finishing department. And that adds up to a total manufacturing overhead of $1,170,000 that has to be allocated over all of these products. Okay. We also have a little more information within this indirect labor. So within this indirect labor, we have two activities. This number has to add up to that number. Okay, so there we have it. All right, let's do this. So I have all these numbers here. So now we're going to do products. We're going to just put this information in just like they show. We have snowboards. Here's the number of production runs, products versus skis. Here's the number of moves, products versus snowboards versus skis. The direct labor hours in cutting, okay, 2,000 and 3,000. The direct labor hours in finishing, 4,000 and 3,000. And interestingly enough, they're producing more of the or the same amount of the snowboards they are the skis. Okay, so let's see what we're going to do. We're going to come up with a single rate first. Single rate is the entire amount of overhead divided by direct labor hours. So you have to add up all your direct labor hours. You have to add these two together. So 5,000 plus 7,000 is 12,000, which results in a manufacturing overhead rate per direct labor hour of, I just lost my cursor. Just a minute. Let me see if I can get it back here. Can't believe it. Oh, shoot. I was doing pretty good here. Just a minute. It's always got to be something. I hope it's not my battery. Hang on just a second. Let me turn it off and on again. I might go ahead and replace the battery. Stand by a minute. I got technical difficulties. You have to be ready because they happen any moment. Let me see if I can get my battery out of this. Just a second. Now let me see if I'm back. Okay, let me turn it back on. Okay. I think I got batteries. If not, I'll be right back and I can't stop the video. So you'll just have to fast forward it. So hang on. I don't know my shortcuts in Zoom. Of course, this has to happen. Please stand by. Ah. Hey, it's back. Woohoo. All right. I don't know what I was doing. Okay. Thank heavens. All right. Yikes. Okay. So once again, we are, if I can get this to get back where it was. Okay. Okay. We left off with the single rate, which is 97.50. So then if we take our snowboards, and remember, this is direct labor, right? Okay, so this is direct labor. And let me show you what I've got here. Okay, so we're taking direct labor for snowboards, both departments times 97.50. Well, both departments have, you add up 12,000, right? And so you get, okay, so this is 2 plus 4 is 6 and 3 plus 3 is 6. So you get the same number of direct labor hours for each product. So single rate is the same amount of manufacturing overhead per snowboard. Okay, per snowboard. Now let's look at it from a multiple department rate. And remember, when they do that, they have to break up that overhead into however much they tell us to. So be sure that you see this here. So 435,000 and 735. One's for cutting, one's for finishing. And yes, it must equal 1,170,000, which is our original. So now how are we going to do it? So this one says that we're doing this per direct labor hour. Okay, per direct labor hour right here. So here's how we did it. We took the 435,000 and divided by 6,000 direct labor hours. No, 5,000 direct labor hours. My fault. We're just looking at the cutting department only right here. So, okay, so their rate is $87 per direct labor hour, and finishing has to take the 735,000 that was assigned to them divided by 7,000 hours. So it's 105,000. And now we're going to apply this to each product. So Each product has a certain number of direct labor hours for cutting and a certain number of direct labor hours for finishing. So here we are in snowboards. Okay, and I went ahead and broke them up and then added them together. So in the green is the answers that you would want. So my cutting for snowboards, right? Let's go ahead and understand what's in here. Okay, so we've got, usually I can get this to highlight. There it is. We've got cutting hours times, and this is just for snowboards, 2,000 times 87. Okay, let's go to finishing now. So snowboards uses 105 as the rate times 4,000 finishing hours. And when those two get added together, then you get 594,000. You divide by the number of units, which is 5,000 units, and you get $118.80. Okay, so let me put how I got this number. Okay, so this is these two added together, right? Yep. And then this is, let me put this on here, 594,000. I got to put that $sign. 594,000 divided by 5,000 units. Okay, that's how I got the 118.80. Okay, sometimes you can get lost with how you come up with the number. So I want to try to be sure you understand it. So, and then once again, we're divided by, because we are producing the same number of snowboards as we are skis. So that's interesting. Okay, so there's how you got this. Now we're ready to do it based on our activity rate. So yes, I'm still here. Don't you dare let me go. Okay, so here comes the rate. You said, how did you get the rate? Well, they divided out. Okay, so let's see here. Production control is 90. Okay, that's 90 divided by 500 runs. Okay, because remember, 500 runs is the total. So that's how much it is per run. Okay, then we do materials handling. Materials handling is $270 divided by 7,500 moves. Okay, you got to do total moves. Okay, and that is $36 a move. Okay, then our cutting department is $250 for the department divided by, and this is all of the cutting hours, which is 5,000 hours. And I put that there. And then 560,000 in the finishing right there. And it is divided by 7,000 hours. So that's how I got all the rates. Okay, $180 per product run. Production run. $36 per move, $50 per direct labor hour in the cutting department, and $80 per direct labor hour in the finishing department. This is overhead being added. Okay, so now let's see how this comes out by the product. So if you put in the product runs, okay, so this is the $180 rate times the number of runs. So I know it's up here a little further. Let me make this a tad bit smaller. Okay, let me hit enter. So here's the number that you want, but I'm going to break it down by the activity. So they don't have a place to put in all the activities. They have a place to put in the total. but I want to show you how I'm getting this. So when it comes to product runs, snowboards are taking quite a bit because they have so many, right? And skis don't have that many product runs. So I think snowboards, I think they said, okay, so let's go ahead. I'm going to show you how I got the 9,000. So it's $180 times 50. That's quite a bit different, right? That's quite a bit different. So now let's do material handling. Material handling is the number of moves. So it is going to be your $36 rate per move times 5,000 moves. Okay, so it looks like snowboards require twice as many moves as skis. So skis have 2,500 moves times 36, so that's why it's half. But the cutting department is actually snowboards, all right? So we want the number of direct labor hours. Okay, the number of direct labor hours for snowboarding undercutting is 2,000 times 50. And then this is 3,000 times 50. Okay, 3,000 times 50. Now my cursor is giving me troubles. There it is. So 3,000 times 50 goes there. And now we are going to do the finishing. So it's going to be the number of hours times $80. Okay, and these are each of the products overhead per activity and per department. Okay, yeah. So once again, finishing turns out to be 4,000, finishing for snowboards, 4,000 hours times 80, and 3,000 hours times 80 for skis. And once again, let me go back where I was. Yes, all right. So this one is 3,000 finishing direct labor hours. Boy, since I messed with my mouse, there it is, 3,000 times 80, there it is. Now you're going to add all four of these together. Okay, I would do these separate so you can get an idea of what they were. So then together, snowboards are going to get 681,000 of the overhead, and skis are going to get 489,000. Now, when you divide each of these by the 5,000 units, so let me put in this here. I'm going to scoot over just a little bit and put the, okay, so here's what how this is calculated. Okay, 681,000 divided by 5,000 units. Okay, that's how you get your per unit. Then you take your 489,000 and divide by another 5,000 units because they make the same number of skis as they do snowboards. So that's how you're getting that. Oop, I forgot a zero there. So just a second, let me put a zero, another zero in. There we go. All right. So one more time for the record, there's the rates. Okay. So if you are the snowboard line, what do you want? Okay, so let's find snowboards. 117, snowboards 118.80, snowboards 136.20. You prefer this. If you're the skis, which one gives you the smallest overhead per unit? If you're skis, you want the activity rate. Yep. Okay, let's see if we can make sense of this. The plant-wide rate allocates $117 of overhead to each product, while the multiple production department method allocates 118.80 overhead to snowboards each and 115.20 of overhead to skis. Both the plant-wide and the multiple production department methods do distort the allocation of overhead because they do not adequately account for how each product consumes overhead. In contrast, activity-based costing allocates 136.20 of manufacturing overhead to snowboards and 97.80 to skis. Activity-based costing more accurately allocates factory overhead because it better accounts for how each product consumes overhead. Snowboards consume more direct labor hours in the finishing department, which has more overhead. In addition, snowboards consume, okay, hang on, I forgot to pick that. Snowboards consume more production control and materials handling overhead than do skis. So, yep, more is the answer, should be, to that one. If I am able to pick it, there we go. That's why I didn't have that finished. All right, so okay, so one more time. Snowboards consume more direct labor hours in the finishing department, which has more overhead. In addition, snowboards consume more production control and materials handling overhead than skis do. Let's see if I got it right. Did I get it right? Woo! All right. This is because snowboards are made in smaller lots, representing a wide variety of styles, and thus snowboards have higher activity costs than skis. Okay, that's it. All right, that's it for all of the problems that we need to do chapter 4 for the coursework, okay? Now, I'm going to stop my share. Yep, stop the share, say goodbye for now, and we'll see you on the next video.